Here we have the current stock market analysis for SoFi Technologies Incorporated, stock ticker SOFI. Before we begin with this chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comment section below so that other traders will be able to find this information more easily on the platform. So here we have the 4-hour price chart. Each candlestick on this price chart represents a 4-hour trading period. And here we can see some very interesting activity that has started to develop to the downside. I guess if you're long the stock, the word interesting is probably not the word that you would want to use. But the reason that I say this is because this stock is really starting to look as though it could be exceptionally prone to false breakouts. And this does start to make the stock a bit more difficult to trade, especially on these shorter term timeframes. So with this video, we're going to be looking at the 4-hour time frame, which is a bit of an intermediate term time frame. And we will be identifying some important support and resistance price levels that can hopefully use to identify profitable trading strategies for this stock going forward. So as things currently stand, if you've been watching my coverage of this stock, you would know that I had roughly two important price zones in mind. Initially, I was looking at this 760 area because this was previously an important Fibonacci zone that was likely to start to provide some sort of support here, or at least act as a significant price level. And then this sort of turned the bias initially, but then the major line in the sand that I was watching came in right around the 715 mark. So I do think that this downside break of 715 is much more significant, and I will explain why exactly I believe that to be the case. So as things currently stand, what we're going to be doing here is redrawing the entire Fibonacci retracement zone. Because we have now started to see, some fairly significant moves here to the downside. And once we do this, we can see that there's a slightly different picture here that starts to develop. So essentially, what we're doing here is we're sort of inverting the trend pattern here, and now looking at this most recent move to the top side as the significant influential price trend that's currently controlling share price action. This extends from roughly $6.01. This would be the August 5th trading low. And then we extend this area to the $8.30 price high that was posted during the August 29 trading session. So if we're using this as the dominant trend wave here, what we can currently see is that share prices have now moved right into the 61.8% Fibonacci retracement of this ascending move higher. In addition to that, we did break through the $7.15 zone. And as we can see here, the momentum that was generated during this break was outsized. In other words, it was larger than normal. So what this does mean here is that there was some support here, but we also saw stop loss activities below this level once that area started to break. So if you saw my prior video, you would have heard me saying that any break below here would likely start to accelerate price losses. And there were a few different reasons for that. One of the reasons that is easy to point to at this point would be the fact that this would then put us below the exponential moving average cluster. So as we can see here, if we sort of drill in a bit, we can see that this forced share prices below the blue and purple lines. The blue line is the 200 period exponential moving average, and the purple line is the 100 period EMA. So, the break below here was significant for a few different reasons. This was an area of historical support as well as moving average support. And then the break below here did create an upsurge, or I guess we could say a downsurge. It increased the level of share price momentum in the negative direction. So not surprising at all to see share price movements start to accelerate on the break of this level. So the real question now going forward is whether or not this 61.8% Fib retracement level is going to hold. As things currently stand, it's a bit weak because we're not really seeing any other evidence of support that is likely to emerge in this area. We don't really have any historical support zone here. We don't really have any moving average support zone here. So it really is just this Fibonacci area that's existing on its own. It doesn't mean that it can't catch prices to the downside and start to provide some support, but it just means that this level of support would be expected to be weaker than it normally would be. I personally would not take a trading stance based on one signal like that. So I wouldn't be buying at this level just based on this alone. So, as things currently stand, if we do see a break here, it would be fairly significant because this does then put the risk back firmly on the downside, and it suggests that we could start to see a further retracement, a deeper retracement of this entire move back into the lower $6 level. So that would be a pretty bad scenario, and it would suggest that this movement into 830 would then be considered to be a false breakout to the top side. Another point that I've made in prior videos comes from this double top resistance zone that I've been pointing to. It's not a very clean double top. The price levels are a bit far apart, roughly 806 and 795. These are not exactly equal, obviously, but I have been considering this to be a rough double top right around the $8 mark, and then this break into 830. With closes above here on the 4-hour time frame, as we can see, did show that share price momentum should be continuing here in the top side. Now, the fact that this did not happen shows that this could be a false breakout. And this is something that I've been pointing to in prior videos. One of these two movements here is going to have to be considered to be a false breakout. There's no way to have it both ways here. Either this movement into the $6 zone is going to be a false breakout to the downside because we broke through the prior support zone at $6.15, or this upward movement into 830 is going to have to be considered to be a false breakout because this did clearly break above, this roughly $8 double top zone that was being watched for this price chart. So one of these two scenarios is going to have to be considered to be a false breakout. They can't both be correct. So as things currently stand, a lot is really resting on the fate of this 61.8% Fibonacci retracement support zone. Because if we don't see a break below, if we don't see share prices caught here and support found, share prices moving higher, this does really put this entire trend wave here, this entire bullish trend wave at risk. And it does suggest that we would, next have a downside target coming in right at these $6 lows. So if share prices were to break below there, that would then confirm that the $8.30 break to the top side was in fact the false breakout. So we will need to be watching these price levels very closely going forward. Here's the current stock market update for SoFi Technologies Incorporated, stock ticker SOFI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.